how interest rates affect how much you can afford. So, the interest rate you secure when you're buying a home not only greatly impacts your monthly housing costs, but it also impacts your purchasing power. Purchasing power, simply put, is the amount of home you can afford to buy for the budget you have to spend. As rates increase, the price of the house you can afford will decrease. As you can see, the chart I have illustrates this perfectly. And what we're going to do is we're going to put that into the chat box in just a second. But what it does is, as interest rates rise, if you've planned to purchase a home within the national median price range, the numbers we're going to go over are reflective of a principal and interest payment only, which would be around $1,100. Now remember, we have to add back in taxes, right? Because it varies from area to area. So with each 0.25% of increase in interest rate, the value of a home you can afford decreases by 2.5%. So let's take an example. The amount of mortgage you can afford at an 8.69% would be, with the median average obviously, would be $298,000, right? So now at an interest rate of 3.64%, your mortgage could be $510,000, which is a huge difference, right? So right now is a great time to buy for people for that simple reason. You can afford more of a house at the moment. So that's why it's been a seller's market, and buyers, everybody wants to buy a house right now because interest rates are that low. They're talking about them dipping below 3%. So if you're thinking about buying, feel free to reach out to me. I'm happy to help educate you and walk you through the process so you know exactly what you can afford and what's out there, and start to plan and look for a home. We're happy to guide you through the process and answer any questions you may have along the way. Or even if you just have a question in the beginning, just give us a call, 215-757-7257. Until next time, I'm Christina Swain with Keller Williams.